Oh my gosh, I love San Diego. That is like seriously one of my favorite places to jam with my family. But is it a market that you should be investing in when it comes to real estate? Find out. I love San Diego. There's this tiny little hopper flight from where I live here in Utah. And it's like, man, I can hit the east, I can hit the west. My family just this last year, we hopped on a plane, went down to San Diego. It's got this perfect climate. We were doing some SeaWorld, checking out the zoo. It's a lovely place. And it's not overcrowded, it's not overpopulated. But friends, where it's at in the game of real estate, it is past its prime for a basic investor that's looking for good, safe returns. Check it. We have right now a population of 1.4 million people, and the median home price is now already over $600,000. And that's up 9% from the year before. And the reality is that it's slated to be like some of the big cities in California and New York. It's just going to keep going up. But understand the basic economics of winning in the game of real estate is a balance of gains and risk. And we have to have risk if we want gains, but there's smart risk and there's dumb risk. And anytime you go into these highly populated areas and these and where the median home price is now, if the national median is 200,000 and San Diego is 600,000 or New York is 700,000, or we get to these areas that are significantly over, they produce incredible risk because you could be you could actually be a native to that area, have bought a home, owned it for a number of years, have a couple $100,000 of equity, and you're like, hey, I'm going to take it out and I'm going to buy an investment property. Markets like that, they can go up 10% from one year to the next, and you're going to see $60,000 a gain. It can do it for 4 or 5 more years. You can be up $250,000, and they can lose it all overnight. Why? Because the market has to correct. It's all supply and demand. It all comes down to population. And I love to invest in markets around the country where the population hasn't hit its growth, businesses are moving in, cost of living is still low, and you can buy your houses under the median. Those are some of the things that I look for hitting a home run in the game of investing. Because let me ask you, in the game of growth, and if there was $100,000 to make on a property, what is safer? The first 20,000 or the last 20,000? Well, for sure the first 20,000, right? Because I got 80 more thousand to grow. Okay, I want to ask you, what's safer, the first 50,000 or the last 50,000? Well, the last 50,000 is going to be safer. Okay, what's safer, the first 70,000 or the last 70,000? Well, the first 70,000 is going to be safer. For that same reason, I'm not going to invest in these high population markets that have median home prices that are double, triple, and quadruple what the national median is. Why? Friends, they're on the tail end of the growth curve. Now, if you're a multimillionaire, you've got lots of money, and you're playing a long game, that can work for you. But even on just simple rental real estate, once you get over a few $100,000, you can't actually rent the property for what the mortgage is if you put 20% down. Which means that you enter a high risk proposition, you need to put larger amounts down, you're putting a lot more money at risk. I play a game of diversification. I could own 1 home in San Diego, or I could own 4 homes in the Midwest or Florida or North Carolina, some of my hot markets that I'm in. And the difference between 4 to 1 homes is that if 1 home takes a major bath and these 4 homes take a minor bath, which investment is left better off? These 4 are always going to be better off. They're going to have higher cash flow. They're going to have higher equity and growth potential. And you also need to realize that that if you want to play this risk game and you go up 20% when you're cash out $200,000, you can sell out of the market. You can make a grundle. But you better know how to predict and time the market, which I haven't figured out. It moves in principles and patterns, and it follows them no matter what. But when it's going to happen, nobody knows. Not the smartest people on the planet. The smartest people on the planet don't even know that. So either you're banking on everything that you know, or you can step into a system that's a lot safer. So friends, love San Diego. It's not the place where I'm going to play and jam and do all of my real estate investing. It is where I'm going to play and jam and hang out with my family and my friends and have a wonderful time together. Meanwhile, I'm going to go into safer markets that have safer and better gains in that 10, 15, 20% annualized return amount. San Diego is such a nice place to visit just about any time of the year, but I'm going to take my real estate ventures in other markets. If you want to know what they are, check out the playlist. We'll link you up on some of our nation's hottest markets right now. And then aside from that, if you really want to get your real estate investing game on, click the link, learn what you can from me and my team on our website about how we can get you rolling right now. Whether you got money, whether you got no money, doesn't matter to me because I started with nothing, and I'm telling you, real estate is a game where you can take yourself anywhere starting with nothing.